Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors. Just after the close, January 17th. Another solid week in the market equity-wise. Bonds churned around, not too much movement in the 10-year, and that's what we use as our benchmark. In terms of positioning, what did we see in our positions? We added some to our alternative energy space within our U.S. ETF portfolio. We get our exposure there through TAN, a solar energy ETF, and FAN, a wind ETF, both trading very well, as is the market. So we don't want to lean too heavy. The relative strength there is about equal to the market, trading fine. What I liked this week was some of the push in value. Utilities going out at all-time highs today. We can make arguments about their valuation, but the fact is price is price. All-time highs have to be respected. Over in tactical trend, we added to our Berkshire Hathaway position after seeing it really hold that 225 area. And today, Berkshire Hathaway got a little jiggy, got through 230, showing some improvement from a relative strength-wise in the last, let's call it, 2 to 4 weeks. We use Berkshire Hathaway as a value component in tactical trend, which net leans heavily growth at 35%, technology. So we use that as a piece to try to give us a little bit of value. Let's talk a little bit about what we're seeing internally in the highs and lows of the market. We're hearing an awful lot on it, maybe media driven or on the financial networks or even on research pieces that get sent through us and bloggers and so on and so forth about strong momentum and how this kind of momentum is going to lead to a real downfall and people are getting ahead of themselves and the market is getting ahead of themselves. It's very difficult to take any of that information very seriously when a time frame is not attached to it. It's an old trick in the analyst community. Talk about price, talk about momentum, but don't ever join it with time. Don't trap yourself with price and time. We try to get we're about as transparent as we can be. You know we're money managers here. We're trying to show you what some of the things we look at. Fear momentum is very different in the market than greed momentum. Lows and highs are different in the market. And Dorsey Wright put out a great chart, our friends that we use out of Richmond, Virginia, this week, looking at what is the results in the market when the HighLow Index, which we follow, hits an extreme reading for 20 days in a row. An extreme reading to us and to them is 90% or more of the stocks in the New York Stock Exchange making highs in a certain day or week. You can look at it either way. So we take a look at all the stocks making highs or lows, what percent are making highs versus what percent are making lows. We've had 20 plus days of 90% readings. Often, that in our thought pattern, that might portend an overbought, high-risk market. So it's interesting to look at some of the data that was in this piece that the folks at Dorsey Wright put out. Let's take a look at that chart. I've highlighted the yellow portion of the chart, the yellow time frame that we're in right now. And you'll see there's question marks there because we don't know what the returns will be. But what I found interesting is the returns after this really high extreme movement where 90% of the recordings are new highs in the HighLow Index did not normally portend a real drawdown in pricing. And that makes sense when we step back away from the day-to-day. High readings and high lows, high readings and momentum are normally on the back of good things happening in the market. So I found it interesting that the average returns are very solid, not only while the index was recording these 90 days, 20 consecutive days of 90 plus readings, but in the 1 month, 3 month, and 6 month period to follow. So strong high-low ratio readings aren't to be feared. It's normally a picture of health in the market. Are there going to be drawdowns? Absolutely. Are there going to be cyclical, scary drawdowns? Absolutely. But when we actually look at the data linked to market movement and market prices and market analytics, we get a different picture than some of the, I don't want to call them scare tactics, but some of the comments and quotes given on a daily basis about the market being ahead of itself and ready to fall off a cliff. I thought this was great information to share with you. Not something we make decisions on a day-to-day, week-to-week basis, but something we consider in our analytical piece of our research to equity. So hopefully this chart gives you some interesting information. I'm happy to share further information on that. Shoot me an email if you have questions, comments on how we use some of this data to manage portfolios, to manage positions. Certainly reach out. Have a great weekend. Markets are closed on Monday for Martin Luther King Day. We'll be back at it Tuesday, and we'll see you next Friday.